Morning, everybody. Thanks, Adrian. Yeah, not a fantastic week last week in terms of sort of market direction. Friday was a very poor day. Not a lot of things really going on. Fairly lackluster. Let's hope we get a bit more this week. What happened last week? Equity markets, they were pretty flat, slightly lower. This risk rally going sideways. Morning, Susan. Morning, Nicholas. Hi, thank you. Yeah, just sort of, we seem to be on hold at the moment, really. God knows, I could do with some sort of, stimulus to sort of get the old trading juices flowing. But, this is part of what trading is all about. We can only trade what's in front of us, and believe me, we do go through periods when it's not hugely inspiring. But, gold sort of flying around still. Currencies, still plenty of opportunities there. Indices, I've been looking at the S&Ps. They've been quite profitable last week. So, anyway, what's happening this week? Lot of data out this week, everybody. I made the mistake last week of thinking it was non-farm last week. It is this week. Non-farm payroll, probably the most important piece of data. And in fact, what I'll do is rather than blether around too much, I think let's get straight onto the data. Let me just open up a browser and move that across for everyone to see. We're just going to go straight to two-way spreads. For anyone that's new to this, so we're just going to look at the data now. We go from two-way spreads. Just click on the trading tools as usual. For anyone new, this is where we get our data calendar. So what we're going to do is we're going to plan our week. We want to know what's coming out this week. This is a very, very busy week for data. Lot of news, events, etc. out. So let's get straight into it. Click on Market Calendar. We open up the calendar from Forex Factory within the two-way spreads window. What we want to do, though, as we all know, thanks, Harry, is to look at the calendar for the week. So we click on this week. There we have it. So, wow, what's going on this week? Well, what we're looking for are sort of signs to see how the US recovery continues. We had some good housing data last week. We want to see further signs of the build-up in momentum for a more sort of sustained recovery in the US. The picture in Eurozone is pretty mixed, really. Mixed and not pretty good. Not very good, I should say. But there is a lot of data out. We've got data in the US. I've just mentioned non-farm payroll. Got China. China's becoming increasingly important, everybody. The reasons why, obviously, it's the engine of growth for the globe, for the global economy. And as I said to you, I don't know, about a month ago, for the first time in, 60 years, the Economist, the weekly digest for economists and people who are interested in what's going on in the economy in general globally, it's added China with a separate section, so you can see the increasing importance of China. The Eurozone data, UK data, and then we've also got central bank news as well with the ECB and MPC. Okay, so let's look at the main bit of data first. Let me just make sure we haven't lost these tools I can use. Okay, so they're still there, highlighters and everything else. I'm going to go straight to Friday, actually. Friday, end of the week. It is a very busy week, as I say, but this is the most important piece of data. Non-farm payroll, the reason why it's important, unemployment, it's called non-farm for new people joining us this Monday morning. Non-farm basically means it excludes the more erratic employment data from the sort of temporary work that is normally associated with farming. So we call it non-farm payroll. It's effectively the unemployment or employment data. And it's a defining number. It's the most important number in the monthly economic calendar. So we have to be very, very careful at that particular time, at 1:30 on Friday. And it's important we understand what's coming out. Don't trade off news, everybody. It is not worth gambling. We never know quite how the market's going to react. Has the market discounted a good number? Just because you think it's good doesn't mean the market will react positively. So please do not gamble over bits of data. We're a lot better than that. Okay, get my highlighter tool. So the key number, this non-farm payroll, red, it's a very important number, high impact. If you click on it, you can see what it's all about. You can click on the detail window, it'll tell you what it's all about. We're looking for a number anywhere between 185,000 to 200, well, this Forex Factor is looking for 208, slightly slower than the previous month, where we had 243,000. But I do think anything above sort of 200,000 will be pretty positive. The unemployment rate as well is going to remain stable at 8.3%. That's that rate there. So it was 8.3% previously. So those are the numbers we need to look at. What you will also find is that we also have, let's just see if I go normal. We also have data that gives us a foretaste of what's going to happen on Friday with there are earlier reports. I'm just trying to find them now in the US. We got the weekly unemployment claims on the Thursday. That's what basically makes up the unemployment data. They have the sort of weekly data coming out and then the monthly summary, as it were. But we do have a private one that comes out on Wednesday, the ADP non-farm employment change. So we do get a bit of a taster ahead of that at 1:15 on Wednesday. So that'll be quite interesting to watch and see how that goes. But I certainly think, you know, data in the US has been improving. Recovery, I think, is gaining momentum. And I'm looking for a reasonably positive number. God knows, I'd love to see a surprise. I'd just love to see a little bit of, I don't know, a bit more volatility in the markets. I tend to stay 30 minutes away from red data. How much of a gap would you give it? To be honest, Andy, that's quite interesting. I would, if you're in a trade and you're coming up to a very important piece of data like non-farm, Andy, then I'd be tempted either to close it or put a tight stop on it. Certainly, do not go into a new trade within half an hour at least of non-farm payroll. Really, you've got to sort of consider having a flat book when you go into a bit of data like that. It's very, very important. And to be honest, if you think about it, looking at this calendar here, we have got data every hour, 2 hours of the day. Some of it just not very important. It just so happens this week is very, very busy, Andy. So my advice is to watch out for the really important bits of data. And the point of our little chat this morning and what I do every Monday, Monday's the key time really when I go on about this, because this is where you're planning your week. And really, after a bit of data, you can let the market settle down. You'll normally get a spike at 1:30, you'll get, what happens is they get the initial reading for February, and then the market reacts one way, and then sometimes you get an adjustment to the January number, and then it goes the other way, and you get the on the other hand traders who think, well, actually, on the other hand, da-da-da-da. This is the reason why we don't trade off data. Let it settle down, often after about a quarter of an hour, Andy. If you're trading off a 50-minute chart, really, I guess you're talking about half an hour, really, if you think about 2 50-minute bars going by. But, yeah, do not trade off of the data, though. One of the things we're trying to encourage everyone attending our workshops is to adopt a practical way of trading, way of thinking, a way of trading that will enable you to make money. A lot of times people say, well, God, I wouldn't have loved to have got on that trade, Joey. Why don't we do this? Part of it is just too speculative. We aren't trying to entertain you. We're trying to educate you. We're trying to do, you do what we do, and you should have a very good chance of making money, of having a better, performance than perhaps, you would have expected. We can't make you do anything, but if you follow our advice and just avoid some of the pitfalls that a lot of people fall into, you should trade effectively. That's really what we're teaching you. So, Andy, yeah, I agree. Yeah, half an hour is what you should probably give it. Certainly on non-farm, it's a very important bit of data. Okay, other than that, bit of talk about China. We've also got on Friday, so Friday's quite an important day. We have the PPI, CPI. That's inflation data out in China. The rise in January was 4. Let me get my highlighter tool. That's a good idea. So the data in January was 4.5%. We're expecting a slight decrease to around 3.4, 3.6%. So there's the expected number, 3.6%. And this may actually give Beijing an opportunity to cut this reserve requirement ratio that we discussed the other month. This basically frees up capital from the banks that normally have to keep it to support their lending so they can actually lend more. More money lent out, obviously, will encourage economic activity, et cetera, et cetera. So that'll be watched quite closely. Okay. Yeah, because I think quite a few people just looking at China, there have been fears that the economy is slowing down quite a lot, and there were some reports overnight about it slowing down. But I think the worry is that you have a slowdown in the economy, and also a rise in the CPI inflation, which is pretty bad news. But I don't think that's happening. So if we can quell those fears on early Monday morning, it comes out at 1:30 in the morning. Obviously, none you are hopefully awake. We are fast asleep, but the market will be anticipating some sort of we anticipate some sort of reaction on Friday, notwithstanding the fact that we will be sitting on our hands ahead of the data, Andy, at 1:30. Okay, let's just get back here. What else have we got? Well, I talked about the Eurozone. The Eurozone has not been performing particularly well. Having discussed China, the Eurozone really is in a totally different sort of sphere. Let's now go to the data there. What have we got? Okay, that's today, actually. We've got Monday. We have the Purchasing Managers Index, and that is... what else have we got? We've got the Purchasing Managers Index. Let's just get, and I think we have got, let's just highlight that for everybody. So that's on Monday at 9 o'clock. So pretty much in sort of 3/4 of an hour's time. We're looking for sort of a fairly flat figure compared to February. And the other deal we have, let's just have a look at this. We also have second estimate of fourth quarter gross domestic product. I'm not sure that we've actually got... Yes, we have. Okay, 10 o'clock here, and really not a particularly happy picture. We've already had the initial reading of a contraction of 0.3%. That's not going to be revised at all. At least that's our expectation. Other than that, UK, and I want to spin through this pretty quickly because Adrian's plonked himself right down beside me, egging to get on. So let's see if we can run through this fairly quickly. UK, we've also got the services PMI. This is something that we at Trend Signal, we're on the panel here. We have to report our findings to the board run by a company called Markets. So this is the Services Purchasing Managers Index. If you want to find any detail about it, you click on the detail window. It is a fairly important number, so that is something that will be watched fairly closely. Looks like... we are sort of bubbling along a little better than the rest of the Eurozone. The other bit of data in the UK is on Friday, which is the industrial production. Sorry to jump about here, but I'm trying to do it by zone rather than day because it's important that we focus on the really important stuff. On Friday, we have the industrial production data. That's the number I really wanted to get to. Yeah, okay, so here we go, 9:30, so industrial production. So Friday's an important day as well. Other than that, for the rest of the week, the only other things that you may wonder why I haven't really sort of focused on much is because we're not really expecting anything at all. We've also got the central bank news on Thursday. So a very, very heavy week of data, news, etc. On Thursday, we've got the MPC, that's the Monetary Policy Committee, it's the rate setting council of our central bank, the Bank of England. Of course, interest rates are at 0.5%, and you will have heard over the weekend, rather amazingly, despite the fact that interest rates have not moved, the likes of Halifax, so if you're a Halifax customer and you've got a mortgage with a Halifax or our fantastically state-owned bank, Royal Bank of Scotland, our mortgage rates are going up. I mean, just extraordinary. I don't know about you, but I've got savings, and I earn on my cash deposits. I've fixed one for about 1.75%, and yet mortgages are at 4%, and interest rates haven't gone up. And they tell us that the cost of borrowing money in the markets has gone up. I thought they all have their own money. They've been given enough of it from the Bank of England through this quantitative easing. Very depressing, everyone, I'm sure. Who's got a mortgage with Halifax or Royal Bank of Scotland? Any of you feeling a bit aggrieved this morning? I know I feel pretty fed up with it all. Okay, so we got the official bank rate at midday on Thursday. Then the other announcement then is from the ECB, that's the European Central Bank. That is the minimum bid rate, they call it. That's basically how they release the news to the market. We're not expecting a cut from the European Central Bank, although there are lingering hopes that we could see another 25 basis point cut from the European Central Bank, which is headed by this chap, Mario Draghi, this Italian, who's actually done a pretty good job at the ECB. He's certainly pumped a lot of money in, just over €1 trillion through two long-term refinancing operations that have, the second one was concluded last week. So a little bit of hope that there might be a cut there. Other than that, that's pretty much it. So busy week for everyone. So remember to, on a daily basis, check your calendars to make sure you are familiar with what is coming out. Other than that, good luck with your trading this week, and thanks very much for listening.